Okay, the Aussie CAD. The Aussie CAD is an interesting looking chart. Here's the trend. We've been making headway over an extended period of time. We've got three highs here, sort of declining highs, which we've taken out over the last 10 days. We've traded above these highs. Our expectation is for the market to push on and make some progress. What's happened is we've moved up above the highest point in this sequence is 105.55. We spent 7 days we've spent time above the level and only closed above 105.55 in 2 of them. This has got shades of failure trade or turtle soup about it. The high expectation is for higher prices above this level. The more time we don't meet that expectation, the more bearish we become. If you look then, the 104.29, okay, you got 104.43, which is this momentum high when we were still trending up. We've got the 104.29, which is these lows that are holding the market over the last 6 or 7 trading sessions. That's a momentum high. The high made up the top. We've had a pullback. Today's high at 106. You can almost, if we get another couple of up days and fail to make a high, the 104.29 becomes a very significant structural failure, along with the fact that we haven't pushed on above the 105.55. So the structural short would be a very strong sell point. That would be the 104.29. You've got 104.29 structural short to the downside. The structural long is still the 105.55. Yes, we have got the all these daily highs above, but this level still remains technically the structural long. A move above 105.55 is obviously incorporating the previous lower highs, which are in themselves significant turning points in the market. 105.55 structural long, then a 104.29 structural short. Okay, when we get to the 200 tick, here's the 105.55. It's on the premises. To the long side, we've got the 2-day high, and we've got the high of the spike here, generated by the session. So to be prudent and safe, the long point is going to be the high 105.98. $105.98 is the long, in which case, we'll be managing to hold above the 105.55 and break the highest point. We want it to remain above the 105.55, so the long point of 105.98, it's probably too far to expect you to accommodate your stop all the way to 105.55. Again, the your stop is going to, you've got to move your stop according to the rules, the opening range, the market side, etc., etc. So, by putting these, by giving you these stops, a little bit, uh, a little bit flaky, to be quite honest. But in this case, 105.75 would have to be below this area here. 105.75, 20 odd pips is about as much as you'd want to give it. So your long stop, at 105.75 on the short side. We're going to use the 105.15 as our short point. The 105.15 is the basically the lowest, the last high made in the sequence of those three on the daily. That's going to be our short, and it's also the one-day high. So the short point is 105.15. Your short stop is going to be 105.30. Okay. So here we have, on the short side, the 104.29. If we move below here, even after 1 or 2 days, it's going to give us, it's going to have two things: one, structural failure, and secondly, a failure of going on into the new highs, and a possible turtle soup scenario. So that Aussie CAD is a pretty interesting setup. Okay.